Welcome back to the Denver Radio Real Estate Show. I'm Cheryl Garlock with Colorado Front Range Properties, your host. Hey, you know what? I've got Chris Zadra with W.J. Bradley in the studio here with me today. And today, we're going to be talking with Chris about the mortgage industry here a little bit here. But I have got to tell you guys here, I've got to tell you, this show is all about residential real estate. So if you're thinking about buying or selling or investing, this is the place you want to be. You got questions on it? That's what we love to answer. 720-373-0654, or go ahead and pop online to denverrealty.com and you can always connect with us there. Chris, you've been in this business of lending and mortgage money making here for a long, long time, right?
Absolutely. It's almost 18 years.
18 years. Well, I've got something to give you incentive to work to nearly 100. There was an article in the paper.
I don't know if I'll live that long, but let's go for it.
Oh, listen, let me tell you what. This guy, there's an article in the paper here. The guy was an economist with the agricultural department, and he did 30 years in that career.
Wow.
Okay, now we all typically think, well, career, I'm 30 years, that's it, I'm done, right? He went on to another 31 years in the mortgage business.
I would have to say that he needs to go talk to a psychologist.
Yes, I think so. Well, he's 106. He worked all the way up until about 100 years old.
Holy cow.
Okay,
wow,
listen.
Wow.
I got to tell you guys, you stay tuned to this show here because I have got some reasons for you so you're not in that predicament there of working till 100 years old. It's all about building a pension and a retirement plan here. But first, I want to talk to Chris here, and I want you guys to chime in on this whole conversation here a bit because we got a lot of people in this turning market, as we were just talking about here, and you're going to be wanting to maybe make your move, make that buy. And so one of the things that you're going to be finding out, especially online, aside from a bunch of houses, you're also going to find a lot of mortgage information out there. And we get a lot of people that like to play online,
right?
And look for this stuff all on their own time and think they can get that loan online. That is the worst thing you can do. I am not in the lending business. I am a realtor. I'm here to help you buy and sell property. But Chris is. There was an article that I think was in the Smart Lively Weekly, which was showcased in Bloomberg or something here about people going into the market here and looking at, some of the questions that a loan officer or lending company is going to ask about if you need a loan. Because,
right.
All loans are not created equal.
Absolutely not. They're all different.
They're all different. So one of the first things they're going to ask you guys is this a purchase or a refinance? Is that right, Chris?
Absolutely.
And there's a difference in the rate quote sometimes, isn't there?
There's definitely a difference. I mean, the market's changed a little bit, and so now we see, typically a purchase is going to have the most aggressive rate, and then depending on what type of refinance you're doing, that's going to change the rate as well.
Absolutely. So and another area that has a lot of different subjectivity, I guess, to it is how's your credit?
That tends to be probably the biggest thing people don't understand, and there's so many myths around credit reports, and a lot of them were from our parents. I mean, there were things that were done a certain way back in our folks' days, and nowadays they're done a little bit differently. That credit market has kind of changed a little bit.
Right. So, but you need to be aware that if you think you have bad credit, you really maybe don't know, because you can do a lot of different things with a lot of different credit scores. And the very first place you need to start is getting a lender-approved credit report pulled. Is that right, Chris?
Absolutely. A lot of people, they'll go out and get the free credit report. There's different models that are used, and the mortgage model is the most stringent one of the group, obviously, because it's such a large loan that's being taken out typically for most people. Right.
But I want you guys to know, if you think that, I don't have good enough credit, or my score is really low, you know what? You don't know really what that really means. It's interpreted by the actual mortgage industry and the lender that you're talking to. And B, you also probably don't know how easy it might be to fix that. Isn't that true?
Absolutely. I see it every single day. People call me and say I have terrible credit, and I pull it and it's fine, and vice versa. People that think they have perfect credit have something on there that they weren't expecting, didn't know about, that sort of thing. So that's probably the biggest first step most people need to take.
Yeah, and another thing about looking at what kind of a loan to get for somebody there has to do with what kind of property it is. Whether it's a single family home, a condo, or townhome, how that all plays in, or if it's an income property, which we're going to be talking about here a little bit later on. All those kinds of things play a factor into the rate quote. Is that right?
That is correct. That is absolutely correct. Typically when you start looking in the condo townhome world, those are a little bit riskier as far as the investors are concerned, and so they have a little bit more stringent guidelines to them, but it's fairly easy to navigate if you have somebody that in the industry, obviously like myself, that knows how to go through that process.
Right, and let's tell everyone, the reason that those are a little bit riskier has a lot to do with the HOAs, the homeowner associations, is that right?
That's correct. I mean, the HOA actually has a part within side of the development, amenities, they own portions of the ground, all that kind of stuff. So if there was issues, I remember back when the mortgage mess happened, there was a story about a condo down in Florida where there was one person that lived in this high-rise condo.
Oh, yeah.
Like 30-story condo, and he got the tax bill, and it was some atrocious number, a couple $1 million, and obviously, he had to go to court and try to get all that taken care of because nobody else was there to help share that cost.
That's right. And another area that can also affect what kind of a loan you get or what the terms are on that loan too is going to be what that property is used for.
Yep.
So if it's like a personal private residence,
yep,
or a vacation home, or an investment property, is that right?
Yeah, typically a primary residence or an owner-occupied residence is going to be a vacation home or a house that you live in, and then obviously if you're going to rent it out, that typically looks like it turns into an investment property at that point.
Mm-hmm. And what that really means is that and the government really wants to get behind people. If you guys heard President Obama's State of the Union deal the other night, he's really trying to push the American dream of home ownership again. But making sure we don't go down the path that we went down before.
Right.
So, but the point is that you need to go ahead and have good products and more aggressive products sometimes for the owner occupant.
Right.
And that's why that if you're going to live in the home, there are more to choose from than if you're looking for the vacation or the investment property.
Correct.
Is that right?
And it's also that tends to be a higher percentage of the market. I mean, most people when they're buying a house, they're buying it to put their family in, themselves, that sort of thing. So.
Mm-hmm. And then also, doesn't it also affect the terms of it too about the purchase price? So, the purchase price of the home there, like if it's $200,000 versus $600,000.
Absolutely.
There's sometimes a break and a cutoff as far as what the rate is going to be like.
Right. Typically, anything under the $417,000 purchase price
mm-hmm.
is considered a non-jumbo conventional loan. Anything above 417 is when you start jumping into the
a little higher interest rate.
Yep.
Right. A little higher interest rate there. VA loan. What's the maximum VA loan with the preferred deal here? Is that still?
It's still.
That just changed.
It just changed. I'm trying to think of the number off the top of my head. I want to say it's about. It falls inside the same range as what a jumbo does.
Hey, we got a lot more to share with you here on the Denver Radio Real Estate Show. So get your pen and papers ready because I have got Property Showcase coming right on up there. So get ready here, and we're going to be right back with more to share with you.